This is Matthew Cratter from Trader University, and today I want to talk about why gold and silver are much worse than Bitcoin as a form of money. I know I've talked about this before, but I wanted to make a video where I put my two main objections to gold and silver in a single place to make it easy to access. So make sure you watch this whole video to the end. I think you'll be surprised, especially by the second point. The first problem with gold and silver that Bitcoin does not have is that gold and silver are much more prone to centralization and capture than Bitcoin is. This is simply because it's much more difficult to move gold and silver around, to store them, to verify or say that what you have is an actual gold bar and it's not tungsten with a gold coating, something like this. This can be very expensive to do. Gold and silver are both very heavy, and as a result, it's very difficult to move large amounts of gold and silver around the world. This is really one of the origins of the modern banking system, is derived from the lack of portability of gold. So because gold is difficult and dangerous to move around, it's not very secure, especially if you're moving around large amounts of value. A bank would store the gold for you, actually store the gold bars or the gold coins or bullion, and then issue banknotes against it that were redeemable for gold. And in this way, you could travel around the world with a piece of paper in your pocket much easier than a bar of gold. And if you're on a ship that sinks, you could just get another piece of paper from the bank and you wouldn't have to worry about your gold ending up on the bottom of the ocean. This led to problems, though. The main problem historically has been that banks, including central banks and governments, can issue more banknotes than they have gold to back it. And if they do this and then there's a subsequent run on the bank, not everyone will be able to be made whole. This is basically what the US government did in the 50s and 60s. They printed much more money than they had gold to back it. And then various European countries like the French sent over a warship to collect their gold, to redeem their US dollars for gold, basically calling the US bluff. And this is what led to Nixon closing the gold window and ending the convertibility of the US dollar into gold in 1971. In fact, it was this centralization of gold in bank vaults that enabled the government originally to capture it in 1933. So we have Executive Order 6102, which was put forward by President Roosevelt, in which he forbade the holding of gold, gold bullion, gold coins, etc. You could hold a small amount for jewelry, but you needed to turn in your gold to the US government. They turned it in, they bought it from you for approximately $20 per ounce, and then they revalued gold to something like $35 an ounce. This was very easy to do, and in many cases it was automatic because most of the gold was stored in bank vaults. It was stored in bank vaults because gold is very difficult to move around. Obviously, you can move around a couple $100s worth of gold, but when you're talking about the foundation of the financial system, we're talking about millions or billions of dollars, and gold and silver are very bad for moving this around. If you're wondering where all the gold in Fort Knox came from, it came from the US government stealing this gold from its citizens. Again, I use the word stealing because it paid $20 an ounce and then devalued the US dollar such that gold could then purchase $35 an ounce. So this was theft from the American people. Now, I know a lot of you are going to say, well, the gold's not even in Fort Knox anymore. And this indeed is one of the problems. Is all that gold actually in Fort Knox? Probably is, but who knows? The problem with gold is it's very difficult to demonstrate that it is actually there, and it requires trust. The US government could tell us that it's there, they could do an audit, but we would never really know, are those bars hollow? Are they painted? Are they empty in the middle that there's just a bunch of gold bars on the outside? This is very different with Bitcoin. It's easy to demonstrate the value sitting at a particular Bitcoin address. You can just reveal it to the world. You can sign to show that you control that particular address. And so proof of reserves, which is really what banks should be doing, is much, much easier with Bitcoin. It's basically impossible with gold. You can obviously have an audit of a bank and say that they have a certain amount of collateral or gold bars or silver sitting there, but ultimately you need to trust the audit company and you need to trust the bank management. They could say that the gold is there, they can move it in there when the audit company is there, and then as soon as they're done with their results, they can move the gold away. So it's very, very difficult. Bitcoin is much more transparent and much more easy to use for proof of reserves. If you're finding this video helpful so far, be sure to hit that subscribe and like button. Maybe share this video with a few of your Bitcoiner friends or your gold and silver friends. This is the problem with gold. How do you move tens of billions of dollars worth of gold or silver quickly around the world? And this is obviously what needs to be done in the modern era of global trade. You simply cannot do it. Hence, gold and silver are much more prone to capture and isolation. It took Germany almost 4 years to move its gold from the vaults in Paris and New York, and it cost tens of millions of dollars to move it as well, and it was a risky endeavor. So this is the problem with gold. It's really an outdated monetary technology. By contrast, you could easily move $31 billion worth of Bitcoin from one jurisdiction to another in just 10 minutes. That's the block time. If you want to wait for a couple confirmations after 3 or 4 or 5 confirmations, in other words, after 60 minutes, you can be certain that that Bitcoin has very strong settlement. And it only can cost a few dollars to send this. When you send Bitcoin on the Bitcoin network, the fees you pay are a function of the amount of data. It's not a function of the dollar amount. So I've seen many cases where people moved billions of dollars of Bitcoin and they only paid $10 or $20 for the privilege. By contrast, even wiring money is going to cost you $30 or $40 for a Fed wire. The other nice thing about Bitcoin, if you're moving $30 billion worth of Bitcoin, no one can stop the transaction. You don't need to ask anyone's permission to do it. And you don't have that boat there sitting with all the gold on it that's open to pirates and open to hostile governments, etc. Bitcoin's amazing portability means that it's much more difficult for an unfriendly jurisdiction to control or capture it. Because if they try to do this, the Bitcoin just gets zapped out of the country or out of the jurisdiction. And Bitcoiners will indeed move to a more friendly jurisdiction. We've already seen a lot of Bitcoiners moving to El Salvador, for example. And when they move, they can take their Bitcoin with them using a brain wallet. They basically just put it on a hardware wallet. You create a recovery seed, which is just 12 or 24 words in a certain order. You memorize those, and then when you get to the other side of the border, you can reconstitute your Bitcoin. This is not something that you can do with gold. Maybe you can smuggle $200 worth of gold on an airplane, but even then you're going to go through the X-ray machine and the metal detector, and people are going to know that you have it. Good luck trying to do this, though, with like $10 million worth of gold or $30 billion worth of gold. This is one reason it's very important for Bitcoiners not to leave their Bitcoin on an exchange like Coinbase or Gemini or any centralized exchange, because this can ultimately lead to a 6102 sort of situation and government capture. But if you're holding your own Bitcoin, if you're holding your own keys, as we emphasize on this channel, then you have complete control of your Bitcoin. But it is a situation where it's not your keys, not your coins. We don't want a 6102 event to happen in the US. If it were to happen, if the US government were to confiscate, say for example, Bitcoin off of Coinbase, this would not mean that the Bitcoin would disappear. But what it would mean is that the US government would have an incentive for the price of Bitcoin to go up. If they decided to dump it to try to force the price of Bitcoin down, all of us could buy Bitcoin at reduced prices. So Bitcoin is not really created or destroyed. And this is less of a problem. There's a game theoretical perspective which says the countries will try to accumulate as much Bitcoin as possible and hodl it, especially as they begin to think that this may become the new global monetary asset. This leads us to reason number 2, that gold and silver are inferior to Bitcoin as money. And this is because gold and silver are not pure monetary goods as Bitcoin is. This was the thought experiment that Satoshi led all of us to. He said, imagine a gray metal that can be transmitted over communications channels and that doesn't have any industrial use. This is what a pure monetary good looks like. And a monetary good is a unique category. You'll often hear people say, well, Bitcoin doesn't have any value or shouldn't have any value because it's not a productive asset, it's not a factory or a business or a stock or a commodity or a bond. And people who say this, they don't understand that money is a very special, unique category. And a monetary good is something that's valued as money, as a medium of exchange, as a store of value. It's something that's ultimately universally desired for these values. People, of course, will say, well, I can't buy anything I want now with Bitcoin. Theoretically, you can if you find a seller who's willing to sell you their house or car for Bitcoin or whatever else you want to buy. But I would concede this. This is because we are still early. Bitcoin is an emerging monetary good. It's not used and accepted by everyone globally. And if it were, it would be trading in the millions of dollars. So this is one of those problems. If you wait until Bitcoin has saturated the world and become a fully monetized monetary good, you're going to miss out on the price pump. This is just like someone, when I hear this critique, I always think of the people I used to hear in 1998 who were complaining, saying Amazon didn't have a future because I can only buy books on Amazon. And when you're investing, you need to skate to where the puck is going to be, not where it is now. We see how Bitcoin has these special properties, which leads a lot of us to believe that it is going to be the new global monetary good. Gold and silver, this weird mixture of monetary good and industrial good. And because of this, their price signals are distorted by real-world commodity demand. So when people say Bitcoin is useless, but gold and silver have many industrial uses, this is true to an extent. Bitcoin is certainly not useless. It's a permissionless global monetary network. But this is actually a critique of gold and silver. A lot of gold bugs and precious metal bugs don't realize this, that when you say that gold and silver have many industrial uses, this is actually a bad thing because it makes them less of a pure monetary good. Do you really want the price of your money to change simply because the global demand for smartphones and cars, which both use gold and silver, changes? Do you want these economic cycles and economic demand for industrial goods and precious metals that are also function as industrial metals? Do you want this to change the price of your money? You don't. Bitcoin is a pure monetary good. You want a pure monetary good that will provide signals as pure money, not as something that's contaminated by the medical uses or other industrial uses of gold and silver. The price of Bitcoin, the value of Bitcoin, are not contaminated by real-world commodity considerations, and I think this is very important. What a lot of people don't realize, especially gold bugs don't realize, only 11% of all gold produced is used in industry. I use the number 10% as an approximation. And what this means is that 90% of gold's value comes from it as being valued as a monetary good. If gold were ever demonetized, if it were ever no longer considered money, in the same way that lots of things have been demonetized, seashells used to be considered money by Native Americans. They were demonetized, they were taken over and destroyed by gold and silver coins. But if this ever happened to gold and silver, if they were demonetized, if their monetary properties or their value as a monetary good were destroyed by Bitcoin, the price of gold would go down 90%, since only 10 or 11% is used in industrial considerations. Gold trades at a premium to its industrial value because it's being valued as a monetary good. The fact that it's useful in smartphones and cars and other industrial processes does not give it value as a monetary good. And again, that's only a small percentage of its total value. I often see similar comments in my YouTube comment section, something like this: gold is more useful than Bitcoin, so it should trade at a higher value. This is not how it works. Do you want to know something that's even more useful than gold? That would be silicon, used in semiconductors, obviously is one of the major inputs. Silicon is obviously everywhere around the world. It's on every beach, it's in every grain of sand, and it's a very, very common element, as are hydrogen and oxygen and carbon and nitrogen. These are very useful elements, but they're very bad money because they are not scarce. Gold is very interesting because it does have this scarcity. It has a very high stock to flow. You have these existing above ground inventories, and the amount that's being added to them, the flow, is very small by comparison. And Bitcoin has that same property where it is the stock to flow is very high. Now, the stock to flow model doesn't look like it's holding up very well, but I still think that this is a way of valuing something's scarcity by looking at the stock to flow. And this is one reason that, for example, palladium and crude oil, even though they're also very useful, do not make good monetary goods. But a good monetary good needs to be scarce, and this is another way of saying a high stock to flow. So gold, silver, silicon, these are all useful elements, but it doesn't mean that they're good monetary goods. Bitcoin is basically gold for the 21st century. It's very scarce, but unlike gold, it can be sent around the world at the speed of light. It's portable, it's highly divisible, it's easy to shave off a little piece of Bitcoin in the terms of a Satoshi, much harder, much more difficult to shave off a little piece of gold or silver. So Bitcoin is much more divisible, it's easy to store, it can be sent to anyone, it's permissionless, It's censorship resistant. You don't need to worry about having big guns on your boat that is taking your gold across the ocean. And so Bitcoin is much easier in this result. You'll often hear people say, though, but gold has this 10,000 year history, which is true. I would argue, though, so did horses, so did all these other human institutions that aren't used anymore. So horses are great. They're still fun to ride recreationally, but most people use cars or scooters or motorcycles instead. And so the 10,000 or 50,000 year history of horses ultimately doesn't matter when a superior technology comes around. So I want to make sure that you're not one of these people that your descendants will be laughing at. There are a lot of people, for example, who say that Bitcoin should be backed by gold. And these are people who basically would not have understood the modern automobile either. They would think you have this modern automobile and it needs to be drawn by horses. Backing Bitcoin with gold is ridiculous. It's like driving your car with a horse. It confuses a modern technology with an older technology and tries to hold on to the older technology in a way that's really ridiculous. Gold as a monetary standard, as a backing for money, has been tried and found wanting. The whole reason we're on this awful fiat standard is because gold is so centralizing, and it failed as a monetary backing, and it led to the fiat era. And so we don't want to return to that. We want something that's much more portable and easy to use, like Bitcoin. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.